So what do you do at that point? What do you do? Buy. How much you want to buy? Let's suppose we have $100. What?
40.
What? How much is that? 200. Okay. Well, I like to talk to this class because you guys are not polluted yet. Now, if you go to join a fund, the first thing people would tell you is, oh, gee, don't do anything more than 25 basis points. And then you go with maybe 50 basis points, you do 1%, that's 100 basis points. They use a basis point. So every number sounds big. You know, boy, we're going to do 50 basis points. That's a big deal. That's what it's like. That's what it's like. So keep your innocence, because right now what you're thinking is the common sense. Think about how much effort you put in to get this damn thing right. Think about how good it is. You have virtually no downside. You're trading roughly about 5 times. And the next thing I did is I actually went to all the different stores to see why in the last few years the margin improved substantially. It turned out there was a fad going on especially in the inner cities, that all the little kids want to have, you know, the Timberland shoes and jeans, and boy, the things that, you know, all the store manager tell you, they couldn't really get enough stock. And you look at how much of their international business, how much is actually in shoes and in Asia, less than 10. What they make out of that, less than 10% out of the 10% of the 27%. So you calculate all of that, you say that all of them are gone, you're losing money. So what? It reduced your earnings by less than 5%. So I put a shitload of Anybody know what happens afterwards? In the next 2 years, I mean, you guys all have the internet. You can check right away.
They don't let us check.
Really? You should do that. You should. Why do you want to listen to all this shit? You just do whatever you want to do. As I said, you know, you're right not because other people tell you to or agree with you. You're right because you need to do that. You need to check on that. All of those things should come to you in no less than 5 minutes. Otherwise, you're just not a good analyst. If you're not a good analyst, you'll never be a good investor. Seriously. So you have to at least technically train yourself to be very, very proficient with all of that. Well, the next 2 years, this damn thing went up 7 times. And the truth of the matter is, during all those time, it was propelled by earnings. And so during all this time, you still did not have any risk. It's not like you're hiding, you know, writing some technology company after they doubled, tripled. You expose yourself to a huge amount of attack. It was never more than 15 times earnings, never. But if you traded from 5 times to, you know, to 15 times, and the earnings been growing in that period of time 30% a year, I mean, that add up. That add up. And the other took over as a CEO, and he had entirely different ideas about how to run a company. He was very articulate. He's one of the most articulate person I ever met. Still is. So he doesn't mind to talk to analysts. He initiates not earning guidance, but analyst meetings. And the first meeting, guess who? You know how many people showed up? It was him, me, and another analyst. 3 people. 3 people. And the last analyst, when I sort of went kind of, you know, somewhere in 2000, the end of 2000, the room is just absolutely filled. It was nearly 50, 60 people. A major street broker house kind of initiated some kind of a coverage. So that's I know when I have to sell. So I sold everything.